Well, welcome back to another episode of Let's Grab Coffee. Shawn, this is finally we make this happen.
I'm so excited for this.
I
Thank
know,
you.
I'm
Thank you for
pumped.
having me on.
Thank you for being here, especially for an in-person. I feel like I told you before we started recording, this is like a resurgence
Yeah,
of the podcast in many ways, and it's
no,
always
it's
nice to
great.
do it with a friend.
It's great. Yeah, couldn't echo that more, man. Um,
Yeah, likewise. Well, for folks who don't know, we're gonna get into the personal story in a second, the whole
Great.
career, journey,
Yep.
outlook in VC.
Yep.
For folks in Chicago, know you as the managing partner of Distributed Ventures, a $100 million fund focused on mainly Insurtech, Fintech, healthcare, digital health, all these three segments under the sort of corporate venture umbrella, which we're going to touch on. But you've had a very long-standing career in the VC space.
Long standing. I thought you were going to say meandering career because I think that there are almost two parts to my career, right? The most recent part has been focused on venture building and supporting awesome backers that are bringing compelling innovation to market. And the first part for me was a little bit of a professional finishing school with a couple of different stops. So, I did an investment banking turn
Mm-hmm.
for Lazard's middle market group. I did some corp strat and M&A in a corporate context at McDonald's in the wake of Pershing Square having an activist stake there, and did some time in strategy consulting with BCG. And I'm sure we'll get into it, but kind of tried a bunch of different things. Had the good fortune to hone a really strong skill set and work with some really smart people. But I think over the course of that, kind of got a sense of what resonated most for me professionally, and that was really leading to a focus on early stage things and working with founders and entrepreneurs.
Yeah, I mean that's actually a place I wanted to start with.
Yeah.
You start in sort of mid-market investment banking.
Yep.
You go to the strategy side,
Yep.
right, with both McDonald's, a really actually cool place to do strategy,
Yeah.
especially being in Chicago,
Yep.
and then obviously BCG,
Yeah.
which many are familiar with. Always curious, how does someone transition from consulting and strategy into venture? They seem, it's like a common place to go,
Yeah,
but
I think what's so interesting is you get these different like phases of venture, right? And I think when I transitioned from that consulting sphere into an early stage context, it seemed a little more unorthodox than it does today. I think it's more of a well-trodden path because the skill set is so robust and broad, and you're dealing with ambiguity and
mm,
a lot of change. So that flexibility and the skill set that you can hone in a consulting context, I think has really strong application in a high growth environment. But it was not like an obvious thing in terms of a career path for me at the time, and certainly for some of the folks that I was speaking to. It was much more of an attitude of like, you're really well paid, you have this stable job, like you're getting paid to kind of think deep thoughts and work with established clients, and you're going to the polar opposite end of the spectrum in terms of high risk, a lot of uncertainty in your earnings potential and those types of things. So I had to be a little bit more persuasive, in the moment at that time.
what is a skill set you think strategy consulting gives you, especially today, that's super relevant?
I think a number of different things. And by the way, I think it applies if you're in an operating role or
Hmm.
if you're in an investing role. In the investing context, you're dealing with a lot of the similar things you might be contemplating for clients in a consulting sphere. You're thinking about size of market, attractiveness of market, growth rates, competitive landscape, almost from a game theory perspective. How do you see kind of challengers in the market? How will incumbents respond? Those types of things. And trying to do that with imperfect information, right? In the consulting context, if a corporate client's going to pay you, a pretty attractive sort of hourly rate, like if they're going to go to the trouble of hiring
Mm.
a BCG or a McKinsey or a Bain or any of the other players, that's a significant investment for them.
And
It's
the
probably
expectation of like giving me something I don't know already.
yeah, that's right. I mean, these are not sort of like layup questions that they need answers to that they're spending that amount of money for, right? They're challenging questions. You're dealing with imperfect information. And that's very much the reality that you're living in venture land. And especially for where we play at DV, it's early stage venture, it's seed Series A, It's not as though you can do desk research and find, an industry analyst report or something of that nature. It's like, if I can find it doing desk research, so can any number of other people, right? So you're really dealing with a degree of ambiguity and trying to bring structure and kind of think of the verb, in that context. How do you want to play?
Right.
So I think, that skill set, that sort of dexterity is really helpful. And then how do you want to apply that, right? It's not just a research question. It's and then what?
Interesting. Yeah. McDonald's, good time.
It's a great brand. I mean,
Yeah.
listen, it was, I made the comment about the transition from consulting to the venture sphere. I think it was equally surprising for a young person that was an investment banking analyst to move to McDonald's. But it still continues to be an amazing brand. Hard to think of more brands that have the global presence and recognition
The longevity.
that McDonald's does. So, I got to do really cool work in other markets, right? Got to do work in Japan. Our team focused on a lot of work in South America and Europe. Got to do a variety of things that had really meaningful impact to McDonald's financial performance and also kind of operational performance. That was in the core business. And then, the other dimension that the team I was part of was heavily involved with was unloading a lot of, or moving out of a lot of McDonald's venture positions. They had a corporate venture fund that predated me that was fairly active, did a lot of cool investing work. A lot of people are aware of Chipotle as a standout investment that McDonald's had made, but Pret a Manger, other concepts, really thinking about how they could optimize kind of the value of the restaurant box and the real estate holdings. So when I went to McDonald's, they were the second largest global real estate holder after the Vatican. I mean, so many cool dimensions to that,
Wow.
right? I mean, one, there's the global footprint, there's the scale, so as a young professional in my 20s, that was really, really cool exposure, but definitely felt like a left turn from the investment banking sphere at the time.
To go to corporate. Yeah, I mean, all three are such great areas to learn, especially if you're early in your career.
Yeah.
Investment banking on the finance side, strategy at a corporation like McDonald's. I mean, it's like the epitome of what you would think of strategy and supply chain.
Yep.
And logistics.
Yep.
And then with BCG, because you're seeing so many different clients, and I think they all have these like formal leadership development programs.
Right.
That's how I did a very short stint internship when I was doing my undergrad at GE, in like the golden heydays of GE.
Right.
And it was just tremendous to get that kind of formal, tutoring at that time.
Yeah, there are places that make huge investments in their junior talent, and I was really fortunate to have a couple of contacts where, I had an employer that was investing in their talent in that way. So feel very fortunate in that.
Yeah. I wonder for you, when you were at BCG, speaking generally of consulting, one comment I know and I've heard from friends who were in consulting more generally, who pivoted to either becoming founders or on the investment side, that they sort of eventually develop this itch that, over time it's like you're passing on the solution to clients,
right?
But the follow through is what you miss.
Yep.
Like having a hold on the actual
sort of
execution.
Owning it.
Yeah. Did you feel this? Is that why you moved away from consulting?
For me, I grew up in an environment. I had the benefit of watching, my father build a business, and it was not glamorous, but that sense of kind of like.
What was the business?
It was a manufacturing business. They were a supplier to like Caterpillar and John Deere. It was a really cool environment. My dad traveled a lot when I was a kid, and this is of course in the age pre-cell phone, pre kind of all the modern communication, conveniences. So like Saturday morning, he was like in the office responding to client communications and like letters and things of that nature. Some of your listeners may find that hard to believe. That was the primary mode of communication. But I got to wander his his office, and they had a manufacturing facility, and I got to kind of wander around. Like, I'm sure this was not in any way OSHA compliant, or it certainly wasn't advisable from a parenting vantage point, but I got to go and like play in, they manufactured, among other things, like tractor cabs for John Deere. So I get to go, sit in these tractor cabs and play, or like walk through their manufacturing facility. So, just for me, I think what I sort of came to realize over time was I wanted to be part of building in a way that resonated from my upbringing and sort of what I'd seen nascently. And I think the hard decision in contexts like consulting and investment banking, much the same. You're working with a caliber of talent on average that is super, super high, right? Your access to information is super, super high. But I think for me in consulting, if you're going to kind of find sustained satisfaction in that role, you have to have a really deep kind of industry vertical interest.
That you can build off of.
Yeah, exactly. Or a technical interest. Because I think to your point, you sort of formulate a strategy, you'll do certain analysis, but you do have to hand it off. And then whether or not it's executed in the way that you think is optimal, that's not yours to own. I think for me, it was more a matter of, being part of an early stage growth sort of experience. And for lack of a better way of putting it, like really feeling the needle, seeing the needle move when you punch the accelerator, right? And that was something when I compared BCG's and experience to what I'd seen in Lazard and, especially the lower middle market deals that I'd worked on in the LBO boom. You were often dealing with founders that, again, looked a lot like the environment I grew up in. They hadn't taken outside capital. You were prepping them up for a life-changing event. They'd invested their blood, sweat, tears. I mean, their businesses were their lives. And so I'd sort of had this professional exposure to something earlier in the growth curve, and then something to what was largely more the problems that mature companies were dealing with. And I found the growth and kind of the early innings much more exciting.
Yeah. And then I guess like taking that into and stepping into the foray of VCs is quite difficult. I mean, it's difficult for anybody, even in this market.
Yeah.
They're often, it's like, even to this day, these aren't positions that are, widely publicly posted.
Yep.
It's usually kind of smaller teams,
Yeah.
very curated. It's a lot of word of mouth.
Yeah.
So stepping into VC, unless you sort of pivot from university or MBA, or coming from consulting, usually could make it easier depending on the VC itself.
Yeah. Yep.
But curious for you, like what was the stepping stone? I think a lot of people are always curious, how do you crack into VC?
Yeah. So what I would say, I've got some more general advice, or probably my story would align with what a lot of folks say. I mean, it's not axiomatic, right? To your point, funds aren't coming and recruiting in most, college or business school campuses or, any graduate school program. So they're hard to come by. You have to network into them you've got to dedicate a fair amount of time and energy, and there's risk there, right? Because there's uncertainty as you're going after it. I think that the more you can demonstrate a track record or an expressed interest, really that you're going to have like resolve in your commitment and interest, those are things that matter. So it could be that, here in the Chicago context, like I've been volunteering at 1871, I've been, involved as a subject matter expert coming from X, Y, or Z corporate or vertical expertise, sort of context, but I've worked with founders in these contexts and I love it. And people will attest to the value you bring in your perspective, or, if you've written even modest checks yourself, or had a hand in that so that you can point to a track record. If you've been an entrepreneur yourself in any capacity, or you can speak to entrepreneurial tendencies, I think that resonates. I mean, at the end of the day, venture as a business, you're evaluating risk in a really high risk environment. I think funds are thinking about talent intake the same way. It's sort of like, how is this obvious, or what are the risk factors, and how can you kind of lean into those punches and kind of blunt those concerns for them so that you de-risk yourself as a candidate. That's all more general. I mean, my specific experience was I was sort of networking in this sphere. There was definitely luck, right? So I got to know what were then known as two amazing operators and entrepreneurs, Glenn Tolman and Lee Shapiro. This was in the days they were just transitioning from Allscripts, the EMR provider that they'd built and scaled, to Seven Wire Ventures, and they were looking for help. And back to my earlier comment about what's the skill set you bring, can you solve an acute sort of problem for folks? In their case, they had tremendous deal flow. They were very connected in healthcare, and they needed, some help sort of moving those deals along at that point. So it was like I had the skill set and, deal experience, and jumped in, and that was kind of my entree into the venture market.
When you say, I know you said it was networking and luck. What type of networking do you think works best, both as, I guess, a founder and on the VC side? Because I think, especially in today's world, it's changed a lot. Obviously, you have LinkedIn and all sorts of social, and you have access to events, but that can also be a lot of noise. So people talk about networking a lot, and it's super important, especially in the world that you're in. Yeah. Really, any industry. Just curious, what is the most effective approach for you?
I mean, for me, it's relationship driven, trying to be in person, trying to be highly authentic. These things, like if you're trying to get a venture role, the openings come up quickly, right? And sort of the list of folks who might be interested, generally pretty long. And so it's about, being top of mind, building meaningful relationships so that folks are thinking of you as they may have a need. It's not that dissimilar from early stage startups. It's like when they're hiring, it's because they've had an acute pain point for a period of time. And so, it's like, no, we're not hiring. We need to solve this issue yesterday. Like, we need to find someone and put the butt in the seat, right? So I think that's, it's much the same in the venture sphere. The difference, just extending that parallel between, early stage startups and venture funds, is venture funds budgets change when they raise new funds, right? And they have more management fees that they can draw on. And, I joke with a lot of my companies that if they're doing their job well and I'm doing my job well, they're going to be scaling much more rapidly than I am, because they're going to be taking in rounds of capital and they're going to have more flexibility in their budget. And that has definitely come to fruition, right? It's a lot of fun to see these organizations scale super rapidly.
Yeah, I think it also it's always helpful to know what someone needs. Yeah. Like, what is your particular pain point? Yeah. And if you focus on one industry or segment long enough, they're very common. Yeah. Like Shawn's pain points strictly as a venture investor are going to be quite common to another VC. Yeah. Whether it's deal flow, talent potentially, or diligence, or when you're raising a new fund, access to LPs.
I think for us, the operating DNA is really important in the early stage operating experience when, companies and leadership are highly resource constrained. So, I had that experience at Seven Wire. I was on the deal team for a period of time and then jumped into a concept we incubated. My partner, Adam Blumenkrantz, really deep operating expertise in the insurance sphere. Janet Zhu, who joined us recently, about 8 years of early stage operating experience. To me, that's an important quality to have. Like, it differentiates our capital because we're more than just showing up at the board meetings. We've been in the seat. We know the day-to-day challenges. We can help see around corners so that we can, if we're doing our jobs well, we can help founders and early teams avoid hitting their heads against some of the things that we might have witnessed or run into ourselves.
Yeah, I gotta say, it is a phenomenal team. So
thank you.
Definitely a shout out to you, Adam, Janet, Hill. Just a great team all around.
Hilton Irons joined us more recently, and obviously you Hillwell is someone who's been in the Chicago community for the last few years. So
Oh yeah,
yeah, we have a great team. We're
good
very
people.
fortunate. Yeah.
So what I wanted to sort of understand from your perspective is why insurance? I mean, out of any sort of segment that you can go into, and I know now with distributed ventures, you're focused on insurance, healthcare,
Yep.
fintech,
Yep.
but primarily it is the central piece is, employer services benefits within the insurance space.
Yeah, I mean, our sort of meta overarching theme is we invest in the future of risk and we try to positively affect that. And so that has a number of different facets, right? Part of that is kind of employer-sponsored benefits, major medical, anything related to acute health conditions, or just improving the healthcare navigation experience or health outcomes for individuals. In doing so, lowering cost trend for risk-bearing entities there. Life insurance applications, property and casualty, deep infrastructure investments in those contexts. So really broad spectrum. I think where we're a little bit different, certain funds might be dedicated, or certain shops might view one of those verticals as sort of worthy of, a total strategy. And we view it a little bit differently. We focus on enterprise distribution and, sort of looking at those other verticals. In reality, we see things that intersect a lot, right? You'll see an employer benefit solution that has fintech components to it, like Wingspan, one of our portfolio companies, is a great example of that. Chris Crawford at RxSave, who I know and you've spoken with on this podcast. Chris is another great example. There's a meaningful cost containment strategy play there that is an employer-sponsored benefit value prop, but there's a payment stack and a flexibility in terms of how plan design and incentives can be put around that that's really meaningful. So it's really a fusion of, say, employer benefits and, yeah, exactly.
Yeah, because it does touch pharma, it touches fintech in terms of the card itself as a payment,
That's right.
from a, checkout perspective.
Yep.
And then it touches the insurance side as well.
Yeah.
So
yeah,
all three.
Yeah. So that's kind of how we got here. I mean,
can I ask, how did this opportunity come up?
So
how did you become basically the managing partner of Distributed Ventures?
I would say, stepping way back and describing my career progression, not all who wander are lost. So in my operating experience with the 7Wire crew, we were working with benefits consultants and brokers, and I came to appreciate that, over half the U.S. is accessing healthcare through an employer. And, of the eligible employees, 80% of employees are electing to get healthcare through their employer versus a public exchange. So it's a really meaningful channel. I got to know the benefits consulting and brokerage sphere through my operating experience in that concept incubated with 7Wire, and got to know one of those benefits consultants that was held by Madison Dearborn for a number of years, called NFP. And so my transition from Zest to NFP, they recruited me to build out a corporate venture function for them. So the predecessor fund to DV, the vehicle we're investing out of now, was NFP Ventures, and it was luck, to be honest. I mean, I got to know them. They had sort of capital loaded. They were amazing partners. The executive leadership there thought about it in a really prudent way, had an appreciation that there could be a benefit in the proximity to a corporate enterprise. But I think they were also really thoughtful about keeping that venture function separate from the corporate enterprise. So we were always a separate dedicated fund. It was not like an annual, balance sheet top off. So it had the benefit of the characteristics of a dedicated fund, having the concentration of a corporate venture fund. So that was how I kind of came to NFP Ventures, which, just to complete the thread, we had early exits. We had about 5 exits from NFP Ventures within a couple of years. And, on the back of that success, we're fortunate to get the support of executive leadership at NFP saying, we're happy to do another fund. We want to stake you, but you guys are welcome to take capital from outside as well. So we did that with Distributed.
So it becomes almost a separate entity, right?
I would say we had the benefit of a really strong relationship, and telling you something that you do better than anyone else. Like you have to build relationships along the way, right? It was sort of an earned opportunity outside of the financial performance.
Of course.
So we are independent today. We have strong connectivity
Of course.
from a strategic vantage point, and really earn that right, not just on the financial return and performance, but in the way we demonstrated value in the relationships we built as well, and the types of innovation we brought to the table, even if we weren't investing in a particular company, right? We were like, we think this could be interesting, may or may not be right for us, might be worth you taking a look.
Which model do you prefer, if any? I mean, you don't have to say I prefer one over the other, but what I'm curious of, because I think a lot of corporations are either looking at doing something similar, either they have something similar or they have innovation houses, like in-house innovation labs. I'm curious, do you think one is better than the other in terms of the operational efficiency?
So, it's interesting, right? I've seen two corporate venture contexts, as I noted with McDonald's. To be fair, it's not like I had a hand in, building that or running it. I was really at the table at the time. They were thinking critically about focusing on their core corporate enterprise and getting out a lot of their venture positions. NFP, totally different scenario, had a hand in building that out. So contrasting those two corporate venture, contexts that I'd seen, I think the McDonald's one made me appreciate, and you see this in a bunch of corporate contexts, sort of the commitment to that can be unstable, right? And so if you have an executive leadership change, that can mean that, a commitment to that corporate venture function
Maybe the budget
can wax or wane, right? So I think that's sort of the volatility you have to be comfortable with. But I think there can be enormous benefits too. And I think, again, the success we had as a team at NFP Ventures was really rooted in a very thoughtful approach on the part of executive leadership there. And that positioned us to be, to sort of earn the right to be successful. I think you can have noise, depending on the construct, the sort of corporate posture, and they're thinking about innovation, how much that's really embedded in the corporate culture in the moment, even like incentive structures, right? Like, are people incentivized to consider something that is outside the box of their normal day, right? This is like an extracurricular activity, the way most people think about it. And if you bring good solutions to the table and you can demonstrate value, you're going to earn the right to sort of get an audience with them again and again and again. But if you have a few things that, blow up, or you're kind of coming to partners in a corporate context with ideas that are not thoughtful, not fully baked, goes back to kind of knowing your audience. Like, you need to know their pain points. You need to know what the value prop is here. And is this really sort of an opportunity to match that pain point with something that could resonate? So all those things, it's kind of like you have to do the right things like every day, right? And if you do that well, you can build a really deep relationship. And there are examples of people doing that, super successfully for extended periods of time. I think it's just a function of like, what are all of the variables, and how does that tip the scale in any given moment?
Love that. How long have you been operating DV as a sidecar, so separate of when you were in-house at NFP?
We spun out independently, started making investments in 2022, closed the fund in 2023. So I guess since that final close, we're almost 2 years out, year and a half and change.
2 years out. How many active investments?
9 today.
9. You sit on a bunch of, obviously, the boards of the investments that you've made. What does a standout founder look like to you?
Number one, product market fit, right?
Yeah.
So they've got passion and expertise in the sphere. And looking at background, you're looking for folks. Again, this kind of resonates with some of the comments that I was making about getting into VC. You want indications that they're going to have kind of the drive, maybe the insanity, to push through and kind of climb a hill when statistically, the deck is stacked against them, right, in terms of being successful. So you're looking at background, track record, expertise. You're doing a ton of reference checks, people around them, getting a sense of who they are, how they operate. A lot of that is like contextual, are they geared to win? Do they have the constitution to win? Do they have the expertise? Then there's also the personal dimension of like, I may not be the best board member for every founder. So there's like a stylistic dimension too. Are they someone that wants to hit, the next biggest issue, like over and over and over? Like I think a fair critique of me, probably a lot of founders I work with would tell you, like he is going to focus on the next problem and the next problem and the next problem, right? And like that's not constitutionally for everyone.
Yeah.
So I think there are those like stylistic, personal fit things.
One would think you were a consultant.
Yeah, exactly. Yeah. Product of the environment along the way.
Yeah. But obviously very important.
Yeah.
Interesting. Have you ever had a sort of a standout founder? I'm sure every founder of every portco that you've invested in are standoffish, but
yeah.
Yeah, just curious, like have you ever had a run-in that really, really was the most memorable for you?
I think and I'm not trying to give like sort of a trite answer. It's just like every company is different. The markets they're in are different. The market environment like is different. And so it's hard to compare and say like, hey, apples to apples, this, that, the other. You definitely see where folks spike and stand out. Bill Snyder, who I'm not sure if you know, but he's local in Chicago, the CEO of Cylinder Health. Bill has done a terrific job scaling that company. Strong culture carrier, his first time in the CEO seat. He just builds a business the right way. Very thoughtful, gets scaling, came from a commercial, major medical, carrier background. So kind of gets a key channel partner node and, how you can really ramp a business rapidly. Pam Pure at Posterity Health, a business that we invested in more recently out of Distributed. Very, very strong, deep subject matter expertise. One of the best business development, kind of transformational business development leaders that I've worked with. We invest early, so a lot of the story is growth. It's kind of like you have to have the oxygen to build a big business and then optimize a bunch of other things. Those are examples of like commercial first leaders. There are also like more technical product first leaders. Anthony Mironoff at Wingspan is he's someone that he and his co-founder Greg built an amazing platform that's focused on meeting the needs of contract workers and the employers that pay them and their unique needs in a gig economy context. So that was a business. Some of the time you're having to educate the market. That was a business that they built amazing tech, an amazing solution, and I think the success of that company was really rooted on them spotting this market opportunity well ahead of anyone else and building that. But I would classify them as really smart, strong technical or product first leaders. So yeah, but it's, again, to my point, it's like these contexts are so different, and it's really about thinking, what does the company need to excel in the context they're in, or what are the blockers in their given environment? How do we mitigate those risks so that this company has the opportunity to kind of realize its full potential?
Speaking of realizing full potential, I feel like sometimes the hardest thing I would assume that you have to deal with sitting in your seat is pressure.
Yeah.
Dealing with pressure.
Yep.
And that's often, I'd like to talk a lot about mental health for various reasons, but I think that's not talked about as much in our field.
Yep.
First of all, you're working with a team, a growing team.
Yeah.
I mean, your own distributed ventures team.
Sure. Yep.
You manage $100 million.
Yep.
You are trying to deploy that money into portfolio companies. you are hoping that some of these decisions lead to extraordinary results for you as a fund and for the companies themselves because you deeply care about their conviction. And there are so many levers outside of your control. How do you deal with this pressure?
It is, you have to dedicate focus to it, is the very honest answer, right? I mean, it ebbs and flows materially. And then the other dimension, we're whole humans, right? So you're dealing with founders, investors that have their personal lives.
Families,
I have a
kids.
young family, right? And so I'm trying to do my best at work, my best at home as a partner and a father, and those types of things. It takes a lot of discipline in the way you frame how you show up. And so in the venture context, like with portfolio companies, I can influence, I can't control. We never have a majority stake, right? We're playing a pretty traditional venture game from a holdings vantage point. And so in those board contexts, I'm one of many voices. That's for a reason. That's the purpose of a governance construct. I can bring a perspective to the table. Discourse is good. Disagreement is good. And so I just sort of frame it as my job is to share my perspective. If I'm clearly communicating that, I'm doing it well and I'm explaining why. Some of the time you have to think about the volume on that and how hard you want to push, what your energy level is around that. But I can't dictate these things ultimately, right? In a fund manager context, we've got diversification across a host of portfolio companies. You do your best along the way to construct that with, a view of risk, and yet, you sort of do your best in playing that game and seeing what's on the field in front of you. But, the field can tip, right? Like the markets have been in a very different state, right, the last couple of years than they were, through 2021 for the prior few years, right? Lots been said and written about kind of the froth in the market at that point, or the bubble, and a lot of the air coming out of that market. And so I think you kind of have to have this view of like, am I doing my best within the realm that I can control? And outside of that, you've got to have luck on your side, right? So I think there's definitely an appreciation for that.
Do you have a go-to activity when you feel burnt out?
Yeah,
what you're talking about is a lot of mindset, which I think is super important.
It's a lot of mindset, So
and then there's the physical piece of,
right.
Do you walk? Do you, you fly fish from time to time?
Yeah.
Which you still have
definitely
to take
not as often as I would
You've
like.
promised me to take me to my first fly fishing experience.
We're going to do that.
But I just want to make sure it's on.
We are on record.
It's recorded.
Video. You'll be hooked forever. Your wife will hate me because your disposable income will be gone.
Not good.
No. So some of it is physical, right? Like you want the endorphin release, you want to work out, you want to do those things, take care of yourself. I think the other bit is, getting support, whether that's having your set of folks that you can turn to as a sounding board. That may be formal, that may be a coach, that may be, from time to time, whether it's prolonged or acute in a moment, like a professional mental health person that's involved in your life. But then I think the other bit, just in terms of like the whole picture, is, if you would have asked me the question in my early 30s, I would have been like, work out, play hard, work hard, that type of thing. And I think, now if I'm trying to help a founder work through a challenging moment or dealing with an issue that's, bringing a lot of friction for me, what I find is if I'm going and hanging out with my 6-year-old and getting a sense of what his world is and how his day has progressed,
just changes your
perspective.
perspective.
Snaps things into perspective for me. I mean, it's kind of like my world's really important. And I think it's to the basis for your question. You're dealing with folks that are being paid a fraction of what they could in a market context, right, as they're building. It is their life, right? It is their passion point. It's their days, nights, weekends, all of it. and you see the sacrifices they make, and you're focused on it, and you're managing folks' money, and you want to do the best for them. And some of the time you're just kind of like, yes, all that stuff matters, but you've got to find a way to kind of contextualize that in the broader world. And so it could be, playing sports or going to, a show or da-da-da. For me right now, where I'm in my life stage, it's kind of like making sure I find time to hang out with my kids and approach them on their terms instead of, just kind of being there and bringing the same baggage. And so for me, that's a really helpful sort of steam valve and release.
Well, because they also probably don't, not to say they don't care, but at the age, like if they're super young, they don't, no matter what your day looked like,
Yeah.
when you get home, all they care about is to like play around and, have a good
Totally.
time and catch up. Like,
Yep. And like
So
my
you-
kids are at the age now, like they're preteen, right? So like the world is full of wonder, right? So
Yeah.
I think it's a lot easier to do that now. Like if you were talking to someone that was dealing with like, 13, 15, 17-year-old, they'd probably be like, I actively
Different reality.
avoid,
Yeah.
in those hard points. But, I have a really supportive partner, my wife, and my kids are at that age where, it is a really helpful grounding wire for me because they're at this totally other stage developmentally where like everything is new and everything is amazing and there's an innocence. So that's very fortunate right now.
I got one more for you, and then I'll close with a last question. I know we're both in Chicago.
Yeah.
I've had the fortune of obviously meeting you and
Yep.
becoming good friends.
Yep.
I think I can say it.
Yeah. No,
Officially.
we're announcing it here. No, I think
No,
that's
we're
a
best
not
friends.
so well kept secret. Yeah.
Are we brothers? You
We're
remember
brothers.
Step
We are
Brothers?
brothers.
Yeah. Do you remember that?
Don't get me started on Step Brothers lines. I will
Sorry.
lower the credibility of your podcast very rapidly.
I think we need this at this point.
Yeah.
Very, very fortunate to call you a friend, obviously a trusted advisor in the VC space. But we're both sort of building in Chicago.
Yep.
And I'm always curious, as someone who can, I think, do it from anywhere.
Yep.
And your team is mostly in Chicago. Obviously, Adam, a partner at the firm,
Yeah.
at the fund, is out of New York.
Yep.
But just curious, why Chicago? Why are you bullish on Chicago? What makes Chicago exciting to you?
Yeah. I mean, I'm a Midwestern guy. I mean, we've talked about this.
Minneapolis.
Yeah, actually Rochester, so south of Minneapolis. I came here for undergrad, sort of one role led to another. I've always lived here. So I think I have this appreciation for Chicago and like the promise that it has. And it's not to suggest that it hasn't realized so much already. But I think, the best is yet to come in terms of this ecosystem. And that's a talent statement. That's a sort of cost of living statement. That's, a lot of the things that the folks at P33 talk about, like structural advantages to the city in terms of like universities, major corporations, those types of things. So I don't at all discount like all that Chicago's achieved. There have been amazing companies built here. There's a ton of great talent here. But I just think it's a really rich ecosystem in terms of the inputs that are here. So that's kind of the reason for my commitment.
Love it. Pro Chicago.
Chicago.
Last one. And this kind of just occurred to me now, but we're recording this. It's December 2024.
Yep.
If let's say you and I sit back down, maybe we can do the 2.0 version in December.
Next week? Oh no, I'm sorry. You were saying another year. Okay, that's
too
fine. That's
too
fine.
early, man.
Yeah, no, we
I
can do
mean,
it then. We can do
I'm
that
down.
too. Let me
You
check
want-
my schedule.
Should we
I'm
do a
free.
weekly?
I'm free.
You want to be my co-host on this? Let's do it. You're talking to the wrong person. It's a yes
Do
for
I
me.
or do your listeners? Yeah, that's maybe two.
Yeah, let them decide.
Two different questions.
So we sit here a year from now.
Yep.
What would you hope happens in your personal, professional life that you look back and you're like, this was a bang-on year, worthy of doing another, sit down to talk about it?
Yeah, I mean, number one, in a local sense, I'm hopeful we continue to find great companies, like RxSave, like Cylinder, that are based here. We did have a concentration in New York. NFP was headquartered in New York, so we spent a lot of time there. That's obviously a very rich ecosystem. It's a place where we'll continue to spend time. But I'm excited about finding more amazing founders here and supporting them. I would say the broad kind of VC ecosystem statement I think the skies are clearing. I think we'd all love a crystal ball to know exactly when things are going to be like kind of at a steady state again, because it still feels like it's been slow. But I think we're going to continue to see acceleration there, which is great. Hopefully, see some companies that exit and stand up in a really favorable sense, whether it's IPO or major M&A. I think those proof points are going to be really important for the market and for folks kind of in the mid and late stage capital cycle to kind of come out of the sidelines, come off the sidelines. In a personal sense, as we've noted, it's been a lot of fun as we're continuing to build our team here. So excited for what that will hold, just as we can continue to support the ecosystem outside of investment. Explicitly, it's just we want to be good citizens and human beings here locally and support folks' causes. And I'm sure I'll have all kinds of unexpected surprises at home as my family continues to grow and all the chaos and fun that entails. Yeah.
Love it. Well, I wish you continued success.
Thank you, man.
And appreciate you grabbing coffee on the podcast.
No,
Finally, we
my
made this formal.
My pleasure. Thank you for having me. This is a real treat.
Shawn Ellis, Distributed Ventures. Thanks, man.
Thank you.
Appreciate you. There you go.
So fun, man.